I always like that.
All right, everybody, welcome to another episode of the 360 podcast series. You can tell it's the 360 podcast series by that super cool intro music, right? And my guest today is none other than the gentleman who, A, owns this building that we're in over at 25101 The Old Road. Also, we won't talk about it in this segment, but you can get the number at the end of the episode, the contact information, because in this building also is a really cool thing called the New Home Center here in Santa Clarita. My guest today, Mr. Fred Arnold. Fred, thank you for coming on the show.
Let's talk about money.
You know what? Hold on. My guest today, Fred Arnold.
Yes.
Hold on. Stand by. Turn that one off. Ready? Hold on.
There we go. I love it.
Okay. Got to get some mileage out of these sound effects.
Yes.
Fred, let's talk about, you are an expert in the field of mortgage lending. Let's talk specifically in this segment about residential mortgage lending and sort of the direction of housing right now, this second. Tell us stuff that most of us don't know, but you know because you're a pro in that field.
So I'm getting a lot of calls right now about our homes going up and down in value. Do we have a bubble? What are interest rates doing? There was kind of a pause on people buying over the last 3 to 4 months, waiting for the election to happen and see what was going to happen, who was going to win the election, and how that would drive the housing market. So then that happened, and of course the stock market kept going, and then there was, let's wait till the new year's and see what's been implemented. And now it's a conversation of the current administration is doing so many things now. How's that going to affect housing? And it's causing people to be frozen a little bit, still kind of not sure what to do. However, the numbers that came out today, existing home sales are up, which is good. We need that to continue to happen. So I want to talk about that. Interest rates drive a lot of what's going on with the market because a lot of people need to borrow money in order to buy the house. It's my belief that interest rates are going to continue to ease down with one caveat, and they call it the tariffs, right? But why? Over the last year or so, the average work week has dropped. So what's happened is things have gotten tighter for many employers, unless you're in healthcare or unless you're in entertainment or travel. Things are tight. Things are tighter than they've ever been, right? A little bit of construction. Construction's doing pretty good. But other than that, all other businesses have seen a little bit of a slowdown. So they're, instead of getting rid of employees, they're cutting their hours.
Okay.
And effectively, if you look at those hours cut, it's almost like letting employees go, right? They're keeping their employees. And that's been happening over and over, which helps, reduces the amount of spending people can do. So that's number one. And so we're seeing that happen a lot. The second is people are holding on to their jobs and not switching jobs. So we're not seeing employers having to pay a lot of money for new talent because people aren't moving around much. They just want to keep their job because they're uncertain of the future. First, they're uncertain who's going to be president. Now they're uncertain of how the changes that are being made by the administration are going to affect their job.
Okay.
So that uncertainty. So we're not seeing a fast-moving job market. And lastly is inflation. And you're going to get a lot of pundits on there that might not agree with me. Inflation's coming down. Now, you go and you buy something from the market and it's more expensive. It's always going to be more expensive because 2 years ago, prices went up. It's not like it's typically going to go down unless it's eggs, right, or gasoline. Right. And so you're saying, well, my dollar doesn't go as far. Yes, but that was last 2 years' inflation. Now we're seeing prices moderate quite a bit, which is causing interest rates to drop a little bit because things aren't going to cost as much. In comes one caveat, tariffs. Tariffs cause prices to go up typically. Now, are tariffs being mentioned for a negotiation tool, and are they really going to be implemented? So that's the big question we don't know. But as of right now, the cost of things have moderated. Now, again, you go to the market, your $100 doesn't buy as much as it did 3 years ago, and it will continue not to. Because we had inflation 2 years ago. But as far as prices going up today, they've moderated. We're still seeing some wage inflation, though, when it comes to travel, because a lot of the baby boomers are retiring and they're traveling. So they're keeping the price of airline tickets and travel up. So that's kind of part of the overall inflation. And then housing's still expensive. Now, why are we not seeing values drop? Ed, we just haven't built enough homes over the last decade or so. Since the 2008 recession, builders were afraid to build homes. So we just don't have enough homes. And so people keep asking me, is there a bubble? If values drop, it's my belief as an expert, Ed, that our kids are going to finally buy a house. They are. And I think interest rates with them easing just a little bit, if values drop, that inventory will be immediately absorbed by my kids and your kids waiting to buy a house, waiting to cohabitate, waiting to start a family. This generation's done that, but it's a huge generation of age 28 to 35. They're just starting household formations. And so we believe that's going to absorb a lot of the market, keeping values where they're at. So I see a strong housing market because we don't have enough homes. I see interest rates staying soft because jobs are still available. They're tighter and tighter, and wage inflation is not going up. And inflation is moderating with the caveat of what's going to happen with the tariffs.
Okay. A lot of information, right?
Yes.
Especially and I think I represent the general public. I'm probably a lesser quality member of the general public when it comes to intelligence.
You're a homeowner.
I am a homeowner, yes. Thanks to you helping us with our loan. Thank you. There's a shameless plug right there. Fred, couple things regarding the tariffs, right? The tariffs are designed to do what exactly in theory?
Well, so if you ask Ronald Reagan, the tariffs were bad because we're going to protect our industry in the United States, but we don't do it as good as other countries do, so we're going to charge the other countries more money, which is going to cost the people more money. That's kind of how Ronald Reagan defined it. I think the current administration, and this isn't a political statement at all, I just think they're using it as a negotiation tool. They want it for border security. It's not because of unfair practices. It's because would you stop the flow of migrants into our country? At least that's what we've seen. So it's being used as a negotiation tool, not so much to protect our industries. Now, when it comes to China, fair trade with them, I think it's more of that. But when it comes to North America, it seems to be really a negotiating tool having to do with really not protecting industries in our country, but having to protect our borders.
So, layman's perspective of everything you just said there, if I own a whiskey making company in America, and the United States is importing whiskey from different countries into this country, theoretically, the current administration says we're going to help Ed out. We're going to make sure that Ed's whiskey gets bought by more people living in the United States of America than the whiskey being imported into the country from foreign creators. And the way we're going to do that is we're going to put a tariff on all the whiskey coming in from out of the country so that theoretically their bottle of whiskey is $25, Ed's is only $15. Right. Is that kind of the basic theory of how tariffs are supposed to help the economy? In the United
that's
States
how it's supposed to, but it creates inefficiencies because you're not running your company as efficiently as the one on the other side of the ocean, if you will. And they're importing it at a lower price, maybe cheaper labor, maybe cheaper raw materials. And so it doesn't allow free trade, which causes prices to go up. That's how Ronald Reagan defined it. But this president appears to be using it as a negotiation tool on other aspects, not having to do with trade except when it comes to China.
Okay.
So I say all that because does in 2 or 3 months this all get kind of resolved with our neighbors to the north and the south? And if it does, then that's going to be good for us.
Back to the inflation element a second ago, if I understood you correctly, you said you think that the inflation that people are concerned about is actually inflation that's been in place for the last couple of years. Is that correct?
Yeah, people will say my dollar doesn't go as far as the supermarket. It doesn't because prices went up over the last 2 years and they want it to go down like where it was. And it's not going to go down to where it was because we had inflation. Now, the one thing that makes it so, the perception so unusual is because gasoline prices go up and down. So you're at $5 a gallon, now you're at $4 a gallon, now you're at $4.50. So there's this belief that just because it went up, it's always going to come down. Just like eggs at $12 a dozen, they're going to eventually come down when we resolve it. They're very volatile, but in general, when you go to the supermarket, prices are more expensive than they were 2 years ago, and your $100 does not buy as much groceries.
Okay. In theory, how fast could you take inflation down to, like, if somebody said the magic level for inflation is X, how fast could an administration take inflation down to the desired level? How quickly can it happen?
They're talking about taking it down to 2%. I don't know where they came up with the number of 2%. They have a target of bringing inflation down to 2%. Where did they get that number? I mean, I'm very curious about that because we're at about, if you look at the last 3 month average, around 2.5%, 2 5/8, and so we're near that target number that I think is healthy for our economy. And the reason why inflation got out of hand is we were just printing money and giving it to people to spend, and there wasn't enough goods to buy, so therefore the cost of things went up.
So during the pandemic, I know, to your point, money being given out in an emergency situation, the thought being people's jobs are on hold or they lost their jobs, and to give you money to keep spending, to keep businesses going and the economy going, right?
Exactly,
that whole thing.
yeah.
But if people didn't use that, well, I guess no matter what they used it for, if they purchased something, it helped the economy, right? But for example, if people kind of squirreled that money away and put it in their savings account rather than using it to buy things at local companies or whatever it is, was there any kind of a miscalculation there on the amount of money that was flooded into society to use that maybe didn't get used as much as they thought it would get?
No, most of it got spent.
Okay.
At first, it was squirreled away. And then we saw the spending of it up through 2022. And then they started running out of money and the economy started to slow down. And so at first, you squirreled those checks that you got. I know one person who has 3 children got a crazy amount of money, 6,000-7,000. She goes, I just put it in my bank account until I need it. But then they started spending it eventually, which caused inflation because everyone started spending money and buying that game station, and now the price of game station went up or phones went up or whatever it is, caused inflation to go up because all that spending happened at one time.
Right.
The other factor that we'll just talk about for a quick moment, and I love this because it's how money works, is we owe, I think it's $36 trillion in debt. The government just keeps creating, they just keep spending, and it doesn't matter. Biden spent money, Trump spent money, Bush spent money, Obama spent, they all did, okay? So the only person that kind of balanced the budget was, I think Clinton did a little bit back in the day. And again, my Republican friends will be mad I say that. And then I think, you say one thing or the other, they get upset. But the bottom line is all of them spend money like drunken sailors. It's your money that eventually has to get paid back. And so even the new administration, they talk about tax cuts. So they might be cutting things, but they're also talking about tax cuts. So we still have an imbalance in our budget. We're spending more money which means we have to borrow it, which means money's going to cost more. So that's going to be also a thing that causes price to go up in the future, is basically printing money, which is what we're doing as a government and as a society. And I hope we get it under control. It would be great if we could figure that balance.
If we had the magic wand to balance the budget by tomorrow, what would the average person notice about the country having a balanced budget versus being $36 trillion in debt at the moment?
We'd have to cut spending, which would cut jobs.
Services programs.
Yeah, service and programs, which would be really tough on our country all at once or too fast. I think if we just found cuts in fraud, I always say this is go and ask those retirees. Now it's the baby boomers, great generation who worked here for the government, and say, will you volunteer for us and tell us how there was inefficiencies in your department? Without recourse, we're not going to go against you.
You mean now?
Yeah,
that they're
now,
retired.
like retirees. I was sitting on a plane with a gentleman that was a retiree in State Department, and I go, let me ask you, if we cut the budget by 10%, would it be all right? And he goes, yeah. I go, what do you mean? He goes, well, I mean, we kind of spend money at the end of the year to make sure we got all our money spent for this or that, and that just is the way it was. There was no fraud, there was no thing, but they would spend money to make sure they spent all the money they were given, so that next year they got 2 or 3% more.
Right.
And I said, well, let me ask you this: what if they made every dollar that was cut, 50% went back to the rank and file of the State Department, like a bonus, and then you reduce the budget by that much? And he goes, that would be pretty good. Yeah. I mean, it was kind of like an incentive, right? When you incentivize people with financial gain to cut expenses, they're going to really keep an eye on things. And I think that's something we could do as a country. And I think it would be good for us. But that's not the topic of interest rates, certainly, but that would be a way to do it.
Yeah. So speaking of interest rates and homes, like what's the current interest rate for mortgages in general?
So I'll give you an example. Right now, I have a client that's FHA loan. Interest rate's 5.75, which is really low. It's going to cost them 1% of the loan amount plus other closing costs that amount to about $7,000. So and there's MI. So that APR ends up being the real cost of funds at 3% down, ends up being closer to 7% because they're paying mortgage insurance, these other things. But to give you an idea, the amount they're paying on the dollars they're borrowing is 5.75.
Okay.
So you can get a rate in the fives. If you got a non-FHA loan, if you got a conventional loan, 6.375. By the time you pay points and fees, the APR is around 6.629. I was quoting a client with 20% down on that. So we have to always say the APR because the APR is the true cost of money when you calculate fees and points over the life of the loan.
Remind us the difference between an FHA loan and a conventional loan.
Okay, FHA loan, I'm sorry, is Federal Housing Administration, usually more lenient on credit. It's not a first-time buyer, but typically first-time buyers.
But with a higher percentage rate because they're easier on credit?
No, they're a lower percentage rate, but you have to pay PMI backed by the federal government. Actually, the interest rates are typically lower, but the PMI is higher. And the PMI is that insurance you buy because you're putting less than 20% down.
And can you, at some point, lobby to have that taken off after a certain time the loan's been in effect? Or is it with you for the entire life of that loan?
It's with you for the entire life of that loan unless you refinance.
Got it. Okay.
So we see that. But it's a great way to get in at 3.5% down. I mean, 3.5% down on a $1 million house is not a whole lot, right? It's what, $35,000.
Pretty good deal
to buy $1 million house. So they are available, and certainly a lot of professionals out there can help you with it.
Is that something, Fred? You know, is the old axiom of no matter when you're thinking of buying a home, do it now. Like, in other words, there is all this gamesmanship and strategy. You mentioned it earlier when we started talking about it, people waiting and strategizing and things like that. As a guy who's a pro in the mortgage lending business and just all the things you've talked about, you're obviously well-read, well-versed, very intelligent about that. Would you say to people that the best time to buy a home is relatively now, within a window of not, can you outsmart the market yourself as a regular person?
I can't. I own 10 properties, and I can't outsmart the market. The reason why I believe it's a good time to buy, if you can live in the house for 5 or 6 years, because if we see a pause in values, then it's kind of a good idea to get a house you want to live there and not flip.
Right.
So make sure it's something you're going to enjoy for the next 5, 6 years in case you're in there because values aren't going up. The second thing is, what's your plan to refinance if values drop and interest rates drop? So on an FHA loan, you can refinance even if the value goes down.
Really?
And so we're looking at strategies for our clients to be able to refinance if that happens so they could take advantage of the lower rates. And lastly, is there an opportunity, and I've mentioned this to a lot of young borrowers, including my children, my son currently has a roommate. Actually, they're roommates with each other. But a lot of these young borrowers have roommates. Why don't you buy a house and have that roommate move in and have them pitch in on the rent?
Right.
It's very similar to adding an auxiliary dwelling unit, converting the garage into a living space for somebody.
Yeah.
But why not? A lot of these borrowers are a lot of these young borrowers like my kids. They're used to living with somebody, so why not invite them to help you make some of the payment until you decide to form a family? And because there's not enough homes to go around and construction costs are continuing to go up, so we believe home values will continue to stay strong.
So right now you're talking about interest rates in the high fives, kind of right around that area?
Low sixes, high fives,
okay.
Yes. With an APR, I have to say that simply because
Sure.
it's with about an APR of about 3/8 more on 20% down.
So when you refied a loan for us maybe 5, 6 years ago, we got that, I think, at 3.5, 3.75, right? So so for people that remember those rates in recent memory, is that one of the things that keeps people stuck from jumping into the pool right now?
Why haven't you sold and bought that one-story home for 30% less because your interest rate's 2.75 to 3.5? And so you don't mind walking upstairs, even though you would normally have sold that home and bought a one-story home. That's what the previous generation did. So yes, that's keeping people in their home. But we're finding if rates get to 5.5, individuals where their kids have moved out, they don't need 3,500 square feet, will say, you know what, I can lessen my burden. I can put more money in the bank. I don't mind paying 5.5, but I'm only borrowing half of what I used to owe. And so we're going to start seeing an opening up of that market if we do see interest rates hit 5.5. And I think there's a good chance that's going to happen.
You're a really smart guy.
Thank you.
No, you really are. You're very modest about it, but I love having you come in for these kind of things. And whenever you present in front of groups, also business groups and people like that, you're very smart about tying all the pieces together for people. And again, I'm fairly good representation of the general public, I think. Hear about things, hear about concepts, I hear sound bites on them, but to have somebody come in and actually explain it and describe it in a way that, again, ties the whole thing together is super helpful, and you're a pro at doing that.
So thank you very much.
Thanks for doing that.
I love interviewing with you because you make it easy, natural, and for those that want to reach out to me or anyone on our team to just kind of go through this is what I talk about all day, and it's what I'm passionate about. Or if you want me to speak to your kids,
Sure.
who have finished school and working and not sure what to do, I'm happy to take it step by step, sit down with them. But here at American Family Funding, 818-612-5626, we have a facility here in Santa Clarita, but we can also do something by the phone or Zoom.
That's the other thing, and I know we talked about this maybe a year or so ago, is it a good idea? And I know sometimes people are leery of this because they feel like if they start talking to somebody before they're actually ready, then they might be getting the bite put on them to do something. But is it a good idea for people that don't know that much about the possibility of buying a home to start meeting with people just to gather it? And I don't know how many people are willing to do what you're willing to do, which is sit down with people, give them some information, walk them through it without any pressure on them, because you're a no pressure kind of guy, which is great. Is that a smart thing in terms of the education and the evolution of people's knowledge about the potential someday to purchase a home? Should they start way further in advance than when they actually decide, okay, I think I'm ready?
Yeah. Most people that buy a home typically say, why didn't I do it sooner?
Mm-hmm.
It was pretty simple and easy, and it really is. There's some concepts, and once you get, do you have a down payment? How much can you get in down? Do you have a job? And how's your credit? And things you could do. It's really interesting, Ed. We're working with several clients who just their credits, they were late one time on a minimum payment, and
right.
their credit just tanked. And I just said, look, set it up, your credit on automatic withdrawal for the minimum payment. It's like $35,
right.
just in case you forget. And they did that, and now a couple of years later, they're ready to buy because the credit no longer shows lates.
Right.
And so the amount of education you get from the average mortgage professional that's out there is really beneficial, and I recommend learn as much as you can about investments, about houses, about leverage, about reserves, about all this, Roth IRA. Find out now because you'll be glad you did. And if you bought a house 5 years ago, you'll be glad you did. If you bought it 10 years ago, you'll be glad you did. And if you bought it 20 years ago. And one last thing I want to say, they say, what if I get in over my head and I lose my job? Well, if you lose your job, then go live in the place you used to live or move in with family and rent the house and keep it till you get a job again. Well, yeah, but I mean, come on, guys. I mean, it's not like someone's going to take the house away from you if you're able to. Sometimes life happens, and it's okay.
Right.
It's okay to shift if you have to. It's okay to. I knew an LAPD officer once that rented a room or two out because their kids had moved out and college expenses were there, and they just made it work. And so there's always a lot of good solutions for housing.
Well, that's a great example. If you can't afford to pay it yourself at the moment, move in somewhere else, rent it out to people that are making the house payment for you in the meantime, right? So it's great. Yeah. Last thing before I let you go, and I know this is probably too much to ask because I know you're pressed for time, but how much right now this second is people's ability to get homeowners insurance factoring in to them being able to purchase a home right now? And is that too much to talk about right now? We can put it off to another time.
No, it's big, and I know you're interviewing Felicia later. It's big. It's really big because homeowners insurance is actually adjusting to where I thought it always should have been.
Okay.
I mean, when you're paying $1,500 to insure this big old house of yours for a whole year,
right.
If it burns down and you're paying $1,500 and they're going to give you $400,000, that just seemed odd to me.
Right.
So it's gone up in maybe 20-30%. But on my house in Bridgeport, I'm going to end up paying about $4,000 a year. I should be paying about $4,000 a year because the cost to rebuild it's about $1.3 million. So I think it's starting to adjust out to where it should be. But it is a concern if you bought a condominium, make sure they're properly insured. Condominiums are getting hit really hard with big assessments because they just the fees have doubled in some cases and tripled in some cases. So make sure you get that. And if not, California has a thing called Fair Plan, and I'm sure you can talk to Felicia about this. But it allows you to get kind of a subpar insurance, but it still covers you if your house burns down.
Yeah, kind of exactly. A backstop of sorts.
A backstop, yeah.
Not as good as more traditional
Yeah, but if
policies.
your house
maybe.
burns down, you're going to get money.
You'll get something, right?
Yes.
Okay, Fred, it's really fun talking with you all the time. I mean that. You make all the information very easy to digest, and thank you very much. And for those of you watching this episode, we're going to put a graphic up here at the end of the episode where you have contact information for the 360 Executive Suites properties here in the Santa Clarita Valley, 4 state-of-the-art properties that Fred's put together. The best thing about them, or one of the best things, a lot of great things about these properties. One of the great things about them is the camaraderie and the relationship building and the vibe that each one of them has. It's really a great place to be. You're home away from home for business if you need one. Thank you all so much for watching. And you're going to be treated one more time to this really cool outgoing music. Thanks. Talk to you next time. Take care.